That's why I say we pulled the pin on this grenade. We had to figure out how to put it back before things blew up. A realtor partner of mine gave me a client, wanted me to get them pre-qualified. I called them, I text them, I email them, they don't pay attention, they ghost me, they don't respond, which is okay sometimes. Next thing I know, Monday morning, a contract comes over from a new build where this buyer that I was supposed to pre-qualify actually was under contract. I had not pre-qualified them. I had not talked to them about their income, their assets, nothing. They went on their own and found a house and went under contract. So we were already in it. That's why I say we pulled the pin on this grenade. We had to figure out how to put it back before things blew up. So speaking to them, job history was fine. That was not an issue. They made the money, they had the job employment history, that was gonna work. Problem was, their credit scores are 533. And if you know anything about FHA loans, you gotta put 10% down if you have a 533 credit score. Well, we didn't have any money, so we obviously didn't have 10% to put down, and the goal was to put 3.5% down. So the realtor got a ton of seller credits. So we had lots and lots of money in order to pay for all the closing costs and pay for all the permanent rate buy down. Problem was, we didn't have a credit score that was 580 or higher, and we didn't have any money yet that we could use for a down payment. So spoke to the borrowers, talked to them about the plan. The closing date was about a month and a half into the future, so we had a little bit of time, but we had to be strategic, like where were we gonna come with the money that we were gonna need for this down payment? They made plenty of money, so the question that I'll ask sometimes is like, you make the money in order to be able to afford what you're doing. Is like, where does the money go that you should be able to have in the savings? Come to find out, there are additional other expenses that don't show up on credit reports. You know, we got family, we got other expenses, we got things that we do with our money that may not be the smartest financial decision, but we still do them because we're human. So we had to talk about those things and say, okay, here's the plan. So what I did is I went into my credit report and I went into a credit score algorithm simulator. So for the right lender who knows how to do this, you can actually go into your credit and you can start to manipulate the data. You can actually start to say, okay, well, what if I paid down this account to here? What if I paid down this account to here? And we ran my credit, what do we think my score would be? So we did a round one where we pulled about 8 accounts and we said, okay, these are the accounts that we need to work on. Can you start to pay these things down? And they said, yes. So we went through round one, we paid some of them down, we were missing some of the other ones. When I pull credit, I do a soft pull, which means that it's not an official inquiry. It doesn't impact your credit, but it gives me your scores, gives me your data. So round one, here's your 533. Round two, after they paid down the debt, we were a little bit higher, but we still weren't there. Our closing date is getting closer to us. Good news was that my borrower had a couple of 401ks, one with her current employer and one with a previous employer. So her current employer wouldn't allow her to take any money from her 401k, even to buy her primary residence, which is okay. That's just the way that that fund is designed. But she had a different account where a prior employer, which now she had access to the money, and so we gave her a document that showed how much money she would need to close, and she was able to pull money out of her retirement account to show that she had enough cash to close, but more importantly, enough cash for reserves. You know, it's not just your income, your assets, your credit, and your debt. It's like, how does the whole file look? Well, we're still below 580, so we don't have a credit score that's even eligible for a 3.5% down payment. So we're still not there. Round one, the credit was a little bit better. Round two, we did the same thing. What if I paid down these debts and I was doing this with my credit? What would my score be? We did it. We got a little bit higher. We're around the 568 range, 570. We're still not at 580. We had to go through one more round of, hey, pay this down, very strategic. This account to $10, this account to $25. They followed everything like textbook. Round three, we got the pull. We pulled the credit one last time. The soft pull showed 580. I immediately flipped it to a hard pull, pulled it. 580 on the dot. Now we actually have an eligible credit score to put 3.5% down. We've got the money that we needed for our down payment, but we knew we were gonna have to have money in the bank as reserves. It's not good enough that you have enough money to buy your house. It's good enough when you have some credit challenges and you've proven to have some sort of financial turbulence or maybe financial mismanagement in the past. You really need a reason for the lender to be able to say, hey, I trust this loan. I think it's going to be a loan that's going to perform. And the best way to do that is to have money in the bank liquid as reserves. Not money in an account that you can't get to, money that's sitting right there in case life brings you an event that you weren't looking for, or in case life gives you an expense that you weren't anticipating. You've got money in the bank in order to weather that storm, and you'll be successful in maintaining your mortgage payment. So she had the money in the retirement account, took out enough for closing, and we actually took out more money for reserves so we could have that sitting there. When the file was fully approved, we got an approve eligible, final closing disclosure was balanced. This thing was perfect. We had the grenade in our hand, and at closing we stuck that pin right back in the grenade because the funds to close was exactly the 3.5% down payment, and the seller contributions paid for all the closing costs. And even with a 580 credit score, they were still able to get a low interest rate down in the low fives. So that's a great win from a lender who knows how to put deals together that are tough deals. I don't recommend you do it on purpose, but it is okay to do dangerous things as long as you've done them before. So if you are in that situation where your score is a little bit low, but you got access to cash, you need to talk to me or some other lender who you can partner with. And if you want more information about FHA loans or how to be strategic on how to purchase, be sure to like, subscribe, and comment below, and I'll be back.